Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so yesterday we saw a big sell-off in the markets on anticipation of auto tariffs being implemented by the president. That happened just after the markets closed. The stock market yesterday down 2% on the NASDAQ, 1.3% on the S&P 500. So big sell-off yesterday. What's interesting about this is that on a technical basis, it came right into the level we talked about as being the major first test on the bounce. So let's go into the charts here, folks, and take a look. So number one, what we have here is the S&P 500. And what we can clearly see, this is pre-market. So again, we closed yesterday right here. All right, so we closed right here yesterday. You can see we are just slightly negative on the day. Not much, just a little bit of negativity. Now, you might say, well, why? These tariffs were implemented. Well, the market knew early yesterday that these tariffs were going to be implemented, so it sold all day off into that announcement, right? So again, by the time the announcement came, the market essentially had factored that in already. Now, flipping to the daily chart. Actually, before I do that, remember this trend line up here? Where, again, it looks kind of weird on the intraday chart, this trend line here. Well, let's flip over to the daily chart. Remember this level, the low pivot from January 13th, which was between the all-time high here in December and the slightly higher all-time high in February. We talked about how this trend line, and I had this trend line on the charts literally for the last week. We said this was going to be your first test of whether or not the S&P could really maintain its strength. Well, lo and behold, I think we got our answer on this one, right? I think very, very clearly we can see that that is not the case, and the market sold off. Now, listen, just because it sold off yesterday doesn't mean it's going to continue to sell off, but in the very least, the rejection was about as clear as day. All right, so again, down day on the S&P yesterday. The NASDAQ took the brunt of it. A majority of the downside in the NASDAQ was led by stocks like Nvidia, right? Now, the beauty of the Nvidia chart is it guided to us to this result as well. In fact, in my game plans last week, we talked about, all right, Nvidia has tagged a retrace to a confirmed retrace to the scene of the crime. This tells us that we really should be rejected here. And that's what happened over here. But the stock market actually continued higher, right? So we all know that if we flip back to the S&P on Monday and on Tuesday were slightly higher. But if we go back to the Nvidia chart on the daily chart, look at Nvidia. It didn't get back. Even on Monday and Tuesday, it never got back to those highs. Again, what this told us is that Nvidia was weaker than the overall market. And we know where the market goes essentially is where Nvidia goes, where Nvidia leads the market. And ultimately, what did we see yesterday? Nvidia cratering almost 6% to the downside on continued worries about China demand for chips, et cetera, all of these other factors. And again, we saw a down day there in Nvidia. Now, flipping to the intraday chart, Nvidia is slightly lower today, down another $2 or so. I am watching for a day trade today. Where do you guys think the day trade would be? Well, yesterday we hit a short-term support right here, right? So you can see the low of this gap up from this close to there. This would be referred to as a gap window. That was where we hit today or yesterday, right? And that's what held the stock today. Now, if the stock gets below, where do we think it's going to go? All right, well, the answer should be pretty simple to all of us. The gap fill right here would be your next big test on Nvidia at 108.75 to 80. If it gets through that, double bottom would be the next level right there. That would be at 104.70. All right. So again, we have our levels. As a day trader, we want to pay attention. Even as a swing trader, you want to be fully aware of these levels because it can tell you a lot about the overall market. But suffice it to say, at this point, the markets continue to be relatively weak. One of the things that I look for when the market bounces, and let's flip back to the charts and take a look at the S&P 500 again. One of the things I look for when we get bounces after significant declines, I look to see how strong the bounce is by looking at the Fibonacci retraces. So for instance, and you could do this on individual stocks too, what we can see here is that the bounce only came up to this level, which was also a 382 Fibonacci. So as of now, that's a weak bounce. I would say a 382 retrace is a weak bounce. A 0.5 retrace would be a medium bounce. And a strong retrace would be a 618 retrace. And then obviously you get into 786 would be a very strong. That would be a bounce where, in fact, I'll draw this out for you so we can all do some education here, since I know you guys are here for education as well. But basically, if you were to bounce up to here, then I'd actually expect a bull flag and then new all-time highs. So that's how strong a 786 retrace is after a big drop in the stock market or in any individual stock that gets a retrace. All right. So again, just giving you guys a sense of what we're looking at. Now, today on the S&P 500, I'm monitoring just like Nvidia's gap fill. If the S&P dumps out here, this would be a tradable level. But also just be aware, so with such a weak bounce, this to me, and I've said this for the last couple months, is that I expect the markets to have topped out and ultimately be in a downward trend, meaning that where is this market likely going to go? Sure, you could bounce in here, but eventually we see another down leg here, and then maybe another bounce, and then further downside. I'm looking at this market as really kind of a stair step down for continued downside on the S&P and the NASDAQ. And you can just see, I mean, again, it's tariffs, it's inflation, it's the U.S. economy, and they're all tied together, frankly, right? So again, as tariffs are imposed, prices generally, some of them at least, will go up. We already know the automakers are getting hammered today because they're going to have to raise their prices because the parts that they're buying from out of country are going up. We see GM, General Motors, down. We'll look at that chart in just a minute. But then that raises inflation. The higher prices go, the less people have money to spend, right? Because if you're buying a car and you're spending, let's say, $5,000 more dollars, that's $5,000 less dollars that you could spend somewhere else on other goods. And so again, this is a trigger that will ultimately hurt the consumer and then eventually bring the economy down. And we're already seeing the slowdown in the consumer spending, right? Which is the backbone of the U.S. economy. All right, so just flipping back to the charts here as we get into it. Let's look at a couple other things. So one thing I want to go over is back to Nvidia's chart. A lot of people always ask me, well, how low can Nvidia go? I mean, is it going to go here and then be a new, huge buying opportunity? Is it going to go here to this low? Is it going to go lower? And what I do is I look at history, right? And I think that's important, folks, is that, it's not about me guessing. It's about me making educated analysis and decisions based on past things that occur in different charts, right? And so one of the things I like to show everyone is that if we look back at the charts here and we say, okay, well, what about past big stock moves, right? So I always look at Tesla. Okay, so again, bear with me as we look at Tesla here. But if we look at the Tesla chart, we can see that back in 2021, Tesla had one of the most incredible bull moves. In fact, it was probably a bubble at the highs. And then you ask yourself, okay, well, how much did this decline when it actually declined and the bubble burst? And you look at the high from 2021 to the low of 2023 in January, it was a 75% drop. Now, again, we all say, oh, but this time's different, right? How many times have we all heard that in the media even? Oh, this time's different, right? Ultimately, the answer is maybe, but probably it's not different. Why? Because human psychology is what rules things. Greed and fear. Greed drives bubbles. Fear deflates bubbles. Doesn't matter whether it's, a .com bubble on the .com on the internet that was emerging that changed all of our lives. Does it matter on Tesla with EVs? Does it matter on Nvidia? And the answer is it probably doesn't matter too much. Another good example, Microsoft, right? When was Microsoft's real heyday? The Microsoft real heyday was probably back in 2000 in the .com run-up. Look at this. Here's your 1996 run-up on Microsoft. Microsoft from 1996 to 2000 went up 1,000%, almost 1,100, but 1,000%. That was the internet, which changed all of our lives, just like AI will probably change all of our lives. But again, greed drove it up. What kind of correction did we see when the bubble burst? In a matter of 1.5 years, 66.7% decline. Now, I could go into other bubbles like First Solar. First Solar, folks, is a great example because it was the new age of solar technology. The stock here, I mean, this was incredible. From its open in 2006, it went up 11, almost 1,200%. But then how much did it decline when that bubble burst? It declined down 73%. So what you start to see is there's a theme. And again, by no means, and I want to be crystal clear on this, by no means does this mean that this time for Nvidia has to be the same. But when you start to line up all of these different bubbles, and you can go to marijuana stocks. By the way, the marijuana stocks declined by like 95%. So that's why one of the reasons why I'm not going to show those. But there was a bubble in marijuana stocks. There was a bubble in 3D printing stocks, right? And those stocks have declined by 90%. I'm focusing more on the declines that are in the 70% ratio because those are names like Microsoft, names like Tesla, names that are more equal to something like Nvidia, and therefore it's more applicable to the current scenario, right? If I was just a pumper, I'd be like, oh, look at the marijuana stocks, they declined 90%, but that's not relevant, right? I try to keep it very structured for you guys when I talk through these scenarios. And ultimately, what does that mean? I mean, we can go back to the Nvidia chart here and take a look what that decline could mean. And again, by the way, does this guarantee it? Heck no. Heck no, it doesn't. But it is good for us to realize that when bubbles deflate during bear markets, where could this ultimately go? If we just say, let's just go with a low end. Let's go 65%. And the reason I'm pitching actually 67 is because there's a ton of support here. But you're talking about a $50 price target potentially in a year and a half from the high on Nvidia. Now, would I suggest shorting the heck out of this for a move down there? No, I don't think so. I'm a swing trader. I'm a shorter term trader. But I guess my point being is that if it were to get down this much to, let's say, $50, then it becomes a very intriguing buying opportunity for the long term. Like, think about this. You go back to Microsoft. I'm not going to flip back to that chart. But if you go back to Microsoft, what kind of buying opportunity was that on Microsoft when it bottomed out in 2000, a year and a half after the bubble burst, right? And so again, we have a time frame which is about a year to a year and a half for these things to bubble out. That's what it took Tesla to bottom out back when it was nearing $100, and that was a great entry as well. Same thing with Microsoft. So we know that, again, if we follow suit with these other major names, you basically have a year to year and a half, and then you see about a 65 to 75% decline. And then that is the opportunity there to jump in. Now, again, if Nvidia goes down 70% or even 65%, where the heck is the stock market? That's the scary thing, right? That's the thing we always have to be aware of. All right. So let's get into this. Let's continue on. I did want to look at this chart of SMCI. SMCI having a nice 9% drop yesterday. What kind of pattern formation is this, guys? I love giving you guys little quizzes. What kind of pattern formation is that? It's a bear flag, right? And look, it's starting to break down. And so listen, it's not to say we can't get a bounce today. I think it's down slightly on the day, but my point being is that as a bear flag, that's telling you price is likely going to decline. And the chart again, which gives us not absolutes, but high probability setups, that gives you, again, the idea that an SMCI was due to break down. And so a lot of people were buying SMCI thinking, oh, remember when it was all the way back here? Oh, by the way, guys, let's just do a quick check on this. I'm just curious. From this high bubble burst, 85%. Now, again, they had some questions about their accounting. So I think, like, to be honest, this should have probably been the low right here. Look at that, 70%. So this was their accounting issues, which not every company has, but this was where it was before those accounting issues came to light, 70% decline. I'm telling you guys, this 70% retrace is unbelievable for bull market cycles with bubbles, where the bubbles deflate on major quality names like an Nvidia. That's where you start to look to buy, and that is where I will be a buyer if we get down to that level. Very cool stuff, guys. Very, very cool. Anyways, bear flag formation. Where would your next support be on it? Just simply connect the dots. I love playing connect the dots. Loved it since I was a kid, I guess. But here's your short-term target around $32 right there. That'll be just a short-term target. Eventually, if it goes through that, maybe down into this $27 area. SMH, semis. I know I'm focusing a lot on the semis today, but the semis are in play. Look, trend line, parallel trend line, breakdown, retrace to the scene of the crime, rejection. And again, this is a pattern that you will see play out over and over and over again on these charts. All right, General Motors taking a beating today. Take a look, getting hammered. Again, this is on the back of Trump tariffs. You look at almost any other car company out there. Tesla is actually neutral to positive today. I don't think they're going to get hit quite as hard. Plus, they have the ear of the president via Elon Musk. So again, Tesla not so much down. It was down a lot yesterday, but nonetheless, General Motors, Ford, Stellantis, you name it, all of these other ones are getting hammered. Now, this is trading around $47. Where would I start to get interested? Well, to be honest, not until this low here. So, if by chance it flushes all the way down into this area, you can see this low and these two lows here. I think that would be an area. If you're really aggressive, take this low and connect it through. And this would be your aggressive day trade level here at around 45, 40, 45, 35 right there. All right. So just again, little thing to keep an eye on. There's also a gap fill actually right there. So that's actually not a bad level. Maybe that's a day trade that I'll even be interested in now that I saw the second factor. One factor there, not so much. Now that you have a gap fill plus that trend line within a small range, that would get me a little bit more excited on the overall chart. All right, guys. Flipping over to Bitcoin today. Bitcoin is in. I found this little trend line here. It's not any trend line that starts in this short amount of time is not a very powerful one, but it does show us that price has been kind of grinding up and it's coming to a head. And when you come to a head, there's basically two options here, right? And one is it breaks out. If it breaks out, 92,000 is your likely target. The problem is if it breaks down, you have double bottom here at around 70, just below 77. But really, we have our level all the way down here, which I would be more concerned at. So listen, I did unload some of my altcoins. In fact, this morning I unloaded my SUI with members of Verified Investing Crypto. SUI, again, popping beautifully. Look at this breakout that I caught right here on SUI. And again, we unloaded it right at 280 right here. I actually woke up, I think it was around, was it 4 in the morning? Yeah, right around 4 in the morning and my time, by the way, and took profits right up here. It's come back a little bit, but that was just a beautiful pattern. These wedge patterns, oversold wedge patterns have been beauties. It's one of the reasons why I've picked up a lot of the altcoins. And obviously I've taken profits on a fair amount of them, but the charts were just really overdone. And the breakouts looked like they were going to come. By the way, folks, if you trade crypto, join me in Smart Money Crypto. You also get other services as well that my other traders run in that service. Pretty darn good, but that was a 35% winner on SUI. We really knocked that one out of the park. All right, copper. Well, guys, what is that candle formation? Quiz yourself right now. What is that? I hope you're all saying topping tail because you would be correct. So you got a topping tail. Do you remember the last chart in the commodity sector that had a topping tail? What chart? Right here. See that? Look at the fall, consolidation, and fall. Boom. Hit first target right there. First target right into this low. That was the level I gave you guys. I said you'll have some support around 377. Look at that. Price has already bounced up off of that level. But again, my point of drawing your attention to this is that simply learning how to spot long-term highs. So notice again, going back to years ago, this was your highest point on natural gas. Well, guess what? If we go to copper, this topping tail was an all-time high on copper. So you could go back decades and not find a higher high. Topping tail, sell off. Again, that candle at the highs of a chart, your odds alone are probably 70% success that the top is here. So again, you guys, I always say this to you guys, but always remember is I'm not using any quantum mechanics and all this crazy voodoo type stuff in the charts that some other people use. You don't need it, frankly. I don't think so, at least. In fact, I find it more confusing than anything. You see my charts. They're about as simple as can be. No crazy lines on them, no crazy this, just trend lines. Now, sometimes my trend lines look crazy, granted, but still, overall, keep it simple. I'm a big fan of simple because it allows us to keep the purity of the chart and the high probability. All right. So anyways, beautiful drop on copper here, guys. Of course, in the commodity service, I'm short copper. Of course, I am with that signal. There's no doubt about it. You take that signal and you say, thank you very much, chart, for giving me such a clear indicator of probability of where this is going. Gold. Let's take a look at gold today. Gold is up a little bit on the day. It's kind of retesting this short-term high. If it pushes up, it's going to run into resistance right up here again. I'm still in the camp that it's going to roll over, but obviously right now, as of today, it's having a pretty good day. Silver today up a little bit, although backing off as already. So we'll watch and see how that goes. But again, silver's really, again, a tag support, got to bounce. But same thing, it's running into short-term resistance. If it gets through here, it just goes up to this double top. Again, that's about as simple as can be. And then oil, folks, oil is close to a short. It pierced 70. Remember what I said to you guys? I said, guys, I think oil, and I said this over here. I said, guys, oil's due for a bounce. Watch for a bearish pattern, and then maybe a rally up to about $70. It didn't quite tag my trend line, but that's okay. Either way, right up here, this now to me becomes a short, a higher probability of a downside move. I am not short oil yet myself, but I am monitoring it minute by minute for a potential short here. As again, it's up into this level. I would have preferred for it to actually hit my line. Maybe it still will. But again, this now looks like a completed bearish pattern up into resistance here. We should see a rollover in oil. I kind of already showed natural gas here, folks. So again, nat gas, if we just bring that up, got to bring up the right chart on nat gas. There we go. Again, tag support. So you should expect some sort of bounce, maybe even a retrace. But eventually, I think it's going to break down here. Either way, guys, again, great topping tail and drop, bear flag. I've walked you through this in every game plan. This pattern told us downside was coming, and I said short-term support here. And then if it bounces, break down to this lower level. Awesome, guys. All right. So let's see what the markets do today. We have a lot going on. Economically, we got jobless claims today, some little odds and ends there. Tomorrow, when I do this game plan tomorrow, folks, that's going to be big. PCE inflation data. That's probably the big factor for tomorrow. So watch that like a hawk. That will be the market moving event for tomorrow, and we'll see where things go. But again, right now, markets look weaker. Can they recover today? Can they be flat to positive? We're going to watch, and then the PCE data tomorrow will be unbelievably key. All right. So guys, again, this is where it's all comes down to. We're going to trade the charts. Doesn't mean we're going to always win, but we're going to keep probability in our favor. I'd much rather be the casino, right? Let's be the casino, meaning that, again, every 100 trades, we're going to win 80 of them, let's say, or 70 of them. Be the casino that over the long term, we can succeed. I know you guys can do it if I can do it, because my IQ is basically average. All right, guys, have a great one as always. Love you all. Thank you for supporting me and Verified Investing. Take care.